You may remember how Solyndra, the solar panel maker, got a $500 million government-backed loan and then went bankrupt. Turns out that risky investment strategy did not stop there.
A CBS News investigation has found a pattern of the government pouring your tax dollars into clean energy. Investigative correspondent Cheryl Atkinson is here with a story that you'll only see on CBS this morning.
Good morning, Charlie. Taxpayers backed, as you said, more than $500 million in Solyndra loans. We identified 11 green energy companies besides Solyndra that together got billions of tax dollars, then declared bankruptcy or are suffering other serious financial issues. Most surprising, perhaps, is how bad off the government knew some of those investments were before committing all that money.
Take Beacon Power, a green energy storage company. We were surprised to learn exactly what the Energy Department knew before committing $43 million of your tax dollars. Documents obtained by CBS News show Standard & Poor's had confidentially given the project a dismal outlook of CCC+.
Would you put your personal money into an investment that's CCC+?
Not on purpose.
Economist Peter Morici sums up just how bad that is.
Is it a junk bond?
It is a junk bond, but it's not even a good junk bond. It's well below investment grade.
The Energy Department was investing tax dollars in something that's not even a good junk bond.
Exactly. This level of bond has about a 70% chance of failing in the long term.
In fact, Beacon did go bankrupt 2 months ago, and it's unclear whether taxpayers will get all their money back. And the feds made other loans when public documents indicate they should have known they could be throwing good money after bad. It's been 4 months since the FBI raided bankrupt Solyndra. It received $500 million tax dollars and became a political lightning rod, Republicans claiming it was a politically motivated investment. We counted 12 clean energy companies that are having trouble after collectively being approved for more than $6.5 billion in federal assistance. 5 have filed for bankruptcy: the junk bond-rated Beacon, Evergreen Solar, SpectraWatt, AES's subsidiary Eastern Energy, and Solyndra. Others are also struggling with potential problems. Nevada Geothermal, a home state project personally endorsed by Senate Majority Leader Harry Reid, warns of multiple potential defaults in new SEC filings reviewed by CBS News. It was already having trouble paying the bills when it received $98.5 million in Energy Department loan guarantees. SunPower landed a $1.2 billion loan guarantee last fall after a French oil company took it over. On its last financial statement, SunPower owed more than it was worth. First Solar was the biggest S&P 500 loser in 2011, and its CEO was cut loose, even as taxpayers were forced to back a whopping $3 billion in company loans. Nobody from the Energy Department would agree to an interview. Last November, at a hearing on Solyndra, Energy Secretary Steven Chu strongly defended the government's attempts to bolster America's clean energy prospects.
In the coming decades, the clean energy sector is expected to grow by hundreds of billions of dollars. We're in a fierce global race to capture this market.
Economist Morici says even somebody as smart as Secretary Chu, an award-winning scientist, shouldn't be playing venture capitalist with tax dollars.
Tasking a Nobel Prize mathematician to make investments for the U.S. government is like asking the manager of the New York Yankees to be the general in charge of America's troops in Afghanistan. It's that absurd.
A couple of questions. Does the government believe that this kind of economic support to these companies is a success story?
Yes, I think they do. The Energy Department, which wouldn't agree to an interview, would tell you that this program is high risk by design. All of these programs are. They understand that they're putting tax dollars at risk, but they've built into the program $2.4 billion in potential losses. That's already factored in. And they understand there's a, what they say, valid philosophical debate over whether this is the government's role, but they point out that both Democrats and Republicans in Congress and Democrat and Republican presidents have supported the idea.
And how do the companies explain the failure?
The companies are saying that the ones that have failed, there's really nothing much to say about that, but the ones that are still in business say they are very different than Solyndra. There are not many similarities, that their projects have more support, that the projects are sound even though they've hit some bumps across the way, and in some cases they actually have guaranteed markets for their clean energy products. I should mention that AES, one of the companies, said that it has canceled the loan, and the House Oversight Committee is investigating all of this.
Cheryl, thanks. Always good to have you here with us.
The luxury electric car maker Fisker is expanding a recall of its 2012 Karma over battery problems. The plug-in hybrid is pretty pricey. It sells for more than $100,000. The problem? The company says the car's electric battery could catch fire. That company, Fisker, is one of those that got a portion of a $2.4 billion investment from the Obama administration as part of its goal to put 1 million electric vehicles on the road by 2015. But as CBS News investigative correspondent Sharyl Attkisson found, that effort has in part stalled.
Nothing is more emblematic of the industry's troubles than the Fisker Karma. In 2010, Fisker got a $529 million taxpayer loan to build a luxury electric sports car. But the government cut off the loan after $193 million when Fisker failed to meet its ambitious sales and production goals. Then, a Consumer Reports test dealt the Karma another blow.
It is low, it is sleek, it is sensuous. It's also broken.
Fisker blamed the car's lithium-ion battery, which happened to be made by another government loan recipient, A123 Systems. A123 got a $249 million taxpayer loan. This year's first quarter losses total $125 million. The industry's misfortunes have seriously undermined President Obama's goal.
We can break our dependence on oil with biofuels and become the first country to have 1 million electric vehicles on the road by 2015.
To get to 1 million, the White House pinned its hopes on 11 models of electric vehicles, including the Karma. Our CBS News investigation found that 6 of the 11 either haven't made their first delivery or are already out of business. Others aren't even close to the government's 2015 projections. For example, 36,000 Fisker Karmas and 505,000 Chevy Volts. Current projections slashed the Karma's 2015 number in half and put the Volt at 1/8 of the goal.
I think that these forecasts were very unrealistic, and history is showing that scaling an automobile company is much more difficult than many of these people thought.
The Energy Department's David Sandelow.
Our projections look more like 300,000 instead of 1 million vehicles.
Well, let's hope that we can move faster, and if we don't hit the goal in 2015, let's hit it in 2016.
You'd hope Think City would produce 57,000 cars. They built 263 and went out of business. Ford Transit Connect, you hope for 4,200 vehicles. They built 500 and filed for bankruptcy.
And General Motors sold more than 5,000 last year, and so did Nissan. And around the world, this industry is exploding. You know, innovation involves risks. Any type of new industry is going to encounter some successes and some failures.
Even falling far short of 1 million, backers say electric cars will take off as people realize how much fun and cheap they are to drive. Just to be sure, the president wants to invest $4.7 billion more tax dollars in electric vehicle incentives. Sharyl Attkisson, CBS News, Washington.
The White House has bet billions of tax dollars on lithium-ion batteries for electric vehicles. But has that money been well spent? With one company's story, here's Sharyl Attkisson.
This week, electric car battery maker A123 Systems announced a breakthrough, the next generation electric car battery, better at extreme temperatures, cheaper. The company desperately needs the good news after 2 battery recalls, slow demand, and layoffs. The road wasn't always so bumpy. When President Obama announced $90 billion stimulus tax dollars for green energy, A123 stepped up for a slice of the pie. It spent $1 million lobbying Congress and federal agencies and won $249 million stimulus dollars. When an A123 plant opened in Michigan in 2010, the company even got a call from the president.
I am calling to congratulate A123 Systems on this tremendous milestone.
Having this job means everything to me.
The plant meant jobs for people like Annette Herrera, who'd been out of work for 3 years.
It was really hard.
Herrera was among 1,000 workers who landed jobs with A123. CBS News spoke with CEO David View last fall.
Approximately half the people were unemployed, so we put people back to work.
But 1 month after that interview, A123 laid off 125 employees. Then the luxury electric car Fisker Karma failed in a Consumer Reports test. It was powered by a faulty A123 battery.
It is low, it is sleek, it is sensuous. It's also broken.
A123 was forced to launch an expensive recall, its second in 4 months. With $621 million in net losses since 2009, the company disclosed in SEC filings last month that there was substantial doubt about its ability to continue. A123 has declined further interview requests. As for that battery breakthrough announced this week, many analysts seemed underwhelmed.
These new technologies that are introduced have to be vetted over a number of years before they actually find their way into products. And so the product itself is interesting but doesn't do anything to solve the financial problems that the A123 has.
A123 isn't giving up. It still has more than $100 million federal stimulus tax dollars left to spend. Last week, the company said it would hire 400 workers not to build batteries for electric cars, but for power grids. Cheryl Atkinson, CBS News, Washington.
Elkhart, Indiana lost jobs faster than any other city in the country in 2009. Both Democrats and Republicans promised to re-energize manufacturing in the city, backing a new electric car plant. But instead of a boom, things went bust. Cheryl Atkinson investigates.
With unemployment peaking above 20%, Elkhart, Indiana was at the white-hot center of the economic meltdown and a natural launch point for President Obama's electric vehicle initiative.
That's why I'm here today, to announce $2.4 billion in highly competitive grants.
Republican Governor Mitch Daniels was also on board in convincing Norwegian company Think Global to open a plant in Elkhart to build Think City electric cars. Sticker price, about $42,000. As incentive, the federal government offered Think City $17 million in stimulus tax credits. Dorinda Hayden-Gus heads up the local economic development effort.
We were excited. We were invigorated at a very devastating time.
But it turns out the company had a checkered track record, including 3 previous bankruptcies. We recently visited Think City's Indiana plant, and here's what we found: a largely empty warehouse.
Everybody hoped by this time there'd be more than 400 workers inside a bustling plant. Instead, today, there are just 2 workers at Think City.
Rodney and Josh are slowly finishing assembly on a few dozen 2011 models shipped in from Norway. We were able to drive a Think City car around the empty space where investors once envisioned an assembly line churning out 20,000 vehicles a year. Now, in its 4th bankruptcy, Think Global has been bought by a Russian investor who didn't return our calls. Think's woes also caused one of its investors, Ener1, to file for bankruptcy in January. Ener1 spent a $55 million federal grant to make batteries at this factory in Indianapolis for Think City cars.
What happened?
The market has not been what everybody anticipated it to be with electric vehicles.
Indiana hoped to become the electric car capital. What would you say about that today?
You know, you can hope for a lot of things. What reality is something different oftentimes.
On the bright side, Elkhart's jobless rate is less than half what it was before Think City came to town, but that's due to an uptick in other manufacturing after electric cars ran out of juice. Cheryl Atkinson, CBS News, Elkhart, Indiana.